Well, the tumbling price of oil is something we've touched on a great deal over the past few weeks. So news that the World Bank is lowering its forecast for crude prices may come as no surprise. The bank's latest commodity markets outlook does, however, see some recovery later in the year. Daniel Ryntjes has more.
As oil has continued to flow in volume from the pipelines of Russia, the sands of Saudi Arabia and the fracking wells of North America, concerns about slower demand from China and other emerging markets has contributed to price declines in recent months. Now the World Bank is forecasting an average price for a barrel of crude oil in 2016 of $37, which is a little higher than current levels.
On a conjectural basis, we do think that there is some overreaction in the oil market, in the sense that probably prices went a bit more down than one would have expected. We have examined all the reasons, and indeed there are many reasons why oil prices went down, but we could not, I would say, identify one single reason that pushed them so hard now.
The oil industry in North America has proven itself to be more robust than previously expected in continuing to pump despite the weaker prices, but the World Bank thinks there will be production cuts in 2016. However, the World Bank's latest commodity markets outlook also examines the possibility of slower growth in China, which could lead to more downward pressure, not just on oil, but on a range of commodities impacting many African exporters.
Africa is probably the region that it has been diversifying the less compared to the other regions of the world. So it relies a lot on primary commodities. And given that, as I said earlier, we see a decline in commodity price across the entire spectrum, it's going to face perhaps more headwinds than other regions of the world.
There's also concern in this report about whether intervention by governments to further support their farmers during this downturn could lead to even lower prices for commodities like maize. The key unanswerable question right now is the length of time that commodity prices remain low. That will begin to determine the investment decisions that are made for the long term in many commodity-dependent economies. Daniel Ryntjes, CCTV, Washington.